Today in the crypto space, we see the market fairly neutral. Bitcoin right around $115,000. Ethereum right around $4,200, $4,000 is the support level that we need to hold. And the rest of the crypto space, the altcoins holding up pretty nicely. We have some good gainers like Tau and many others. In today's video, I want to take a look at the general market. I want to use Bitcoin as a leading indicator. But more importantly, guys, I want to talk about Ethereum, the heavyweight of altcoins. What do we expect? Ethereum, show us the way. So you know what? Let's talk about the news, let's analyze the charts, and let's strategize to capitalize. Welcome to the channel. My name is Mike, and let's get right into it, guys. If you're new to the channel, welcome on the channel. We talk about cryptocurrency, Bitcoin, Ethereum, and all the altcoins. Looking for opportunity, whether we go up or down, bearish or bullish, it doesn't matter. All we want to do is stay one step ahead of the market so that we can capitalize on any of the volatility. And if you appreciate the strategy, subscribe to the channel, click the bell so you don't miss out on any of my future videos, including the live streams at 8 p.m. EST, where we talk about crypto news and price action. Guys, if you have any projects you want me to cover on the channel, feel free to let me know in the comment section below. You can hit me up on the socials. The links are in the description. Better yet, guys, join the Discord. The Discord is where it's at. Lots of good alpha, trade setups, fundamentals, and learning material. The best part is it's absolutely free. All right, guys, let's begin. Let's see what's going on here. The market is still holding up fairly nicely. Let's quickly refresh CoinGecko here so that we get the latest and the greatest. You can see in the last little while, we have been getting a good amount of trading volume as the market structures out here at about $4 trillion total market cap. Guys, we want to break above the $4 trillion once again. We were, topping out more or less before the debacle, right around 4.2 trillion more or less. We fell below, obviously, and now we're right back right around the $4 trillion mark. The $4 trillion level is a very psychological level, no doubt, which means that we need to anticipate that there's going to be some sort of emotional reactions around this zone. So at the current moment, we're dealing with emotional froth. Okay, so this is what we're dealing with at the current moment. And obviously, the market is still looking a little, beat up. Retail's not really that interested, but we know that heavyweights are still accumulating. And this is a fact. When, we discussed this on the live stream yesterday, Ethereum whales are accumulating, Tau whales are accumulating, many individuals are accumulating right now, given the fact that the fire sale has happened. Could this have been the last shakeout, the last fire sale, the last orange swan event that we've had, or black swan event that we have before we start actually continuing to the upside with major moves? And of course, I'm not trying to be overly bullish, but I also don't want to be overly bearish here, because after a flush as we had over the weekend, guys, it's somewhat better to be neutral here. In fact, neutral bullish is not bad. What I mean by that is have some exposure. Have some just-in-case exposure, because usually after these flushes, statistically speaking, they usually lead to some crazy moves to the upside. And this, we had a great conversation last night on the live stream, guys. Don't forget, join me live at 8 p.m. EST. Almost every single night, we're here talking about crypto news and price action. Let's quickly scrape through the top 100, and I want to talk about Ethereum today, because generally speaking, Ethereum is the signal of what happens to the market next. Is the market ready to get risk on or not? That is the most important question, because yes, we can talk about Bitcoin. Bitcoin has been showing dominance. That's a fact. If you've been, trading as a trader, trading those altcoins, yes, there was many opportunities to outperform Bitcoin, no doubt. But if you're not a trader, the question is now, should you be shifting some of that capital into some riskier assets, risk-on assets, right? As long as your trading, strategy can outperform holding spot, then, you'll have some flexibility with this decision. But if you are a hodler and you're holding for the top of the range or top of the cycle, right now is the decision that needs to be made. Is it time to take some profit off of Bitcoin? Is Bitcoin going to go for another leg up? Is Ethereum getting ready to get into price discovery? Because if it is, and if all these things, play out, it is very likely that we see some altcoin season price action in the next little while. That doesn't mean that it has to happen right now or tomorrow, the next day, but the way things are gearing up here with everybody on the sidelines and all the emotional individuals in the retail space, guys, it's time that you see the big dogs play. And this is when they come out, when it's red and there's fear. Okay, guys, just to, quickly recap sentiment. We do see Bitcoin, still a little slumpy here, no doubt. Guys, you know that I've been bullish at these bottoms. All entries that I've taken in the last 3 days are in the green. So being bearish is fine. It's not a problem, but you can't not negate the fact that the entries from 3 days ago and even yesterday, for the most part, are in the green. Okay, so based on that fact, what you have to do now is understand that a defensive strategy needs to be placed, right? Because if we do see Ethereum, Bitcoin retrace here, and I'm going to tell you about, what I see on these charts with Ethereum in a second, guys, we could come down for a back test. And this back test, come down and give us those confirmation lows, those higher lows. And for the most part, most people wait for those scenarios. And that's valid. That's a valid thing to do, as a trader, is looking for confirmations, building position sizes as you get those confirmations. However, guys, the last 3 days has given us fire sales that we've never thought of. And if you're one of the lucky ones that were able to get some orders in, guys, you're in the green. You're definitely in the green. So as you can see, a lot of the market is looking for this recovery. We can see this 1 hour fractal showing us recovery across the space. Some of them not so much, like whatever this is, figure, I don't know, is definitely dumping down, not looking too good. I don't like the price action the way it looks either, nonetheless. But the 1 hour fractal's doing okay still. And there's no sense of being absolutely bearish here unless you're overexposed, right? If you're on spot, I wouldn't be worrying. If you're taking low leverage longs and you're in the green, slap a stop loss underneath, and take 10% of profit, defend the gains. But ultimately, what a lot of the bulls out there are thinking, guys, it could be that we are going to continue to the upside. Now today, as expectations are, market opens, New York opens, we had UK open, we had Asia from last night. Nothing really happened, to be honest, right? We were seeing an exchange of hands. However, some altcoins are showing some strength, as you can see, reclaiming some of their price action. Tau, what a beast. 12% move. Beautiful. And of course, there's some that, structurally speaking, hasn't done much, but at least there's some green here. 10% on the World Liberty Financial. We have Near Protocol still looking pretty nice here. I know at the bottom of the range, look at that market structure shift that could be in play here on Near Protocol. Large caps have their benefits, guys. Okay, the volatility is not as crazy, but the upside potential based on where we are right now is still clearly evident. So understand where we're at here with these large caps. Aptos as well, looking okay here, holding its range. I know it's down 2.6%, but this is how market structures are formed. Peaks and valleys give you data, and that data should give you an edge, right? And if it doesn't, sit on your hands until it does. Very, very plain and simple. Ondo looking good. We got nice higher highs and higher lows. One may argue, yes, it does look like a retractive move. No doubt. Could we come down and sweep those lows and hunt the trendline liquidity? All very possible, but you cannot deny the fact that if you've gotten into any long positions within the last 3 days, you are in the green. You are in the green. That's the way it is, guys. So you're defending now gains, not so much, losses. Now, I understand that for the most part, a lot of us took beatings, guys. I'm not looking at that. We need to move on. We took beatings this weekend. The only thing that we can do is laugh about it at this point. What else are we going to do? We got to move on. We got to laugh about it, and we got to learn from it. Most importantly, learn from it. And what I learned in the past is that you got to just quickly take it and quickly start moving on, because you're going to lose out on opportunities. As I mentioned, entries in the last 3 days have been green, are still green and still very profitable. Okay, as you can see, lots of good price action, lots of market structure here at the bottom of the range. We got Sky doing pretty good. We got even Render getting a nice comeback, beautiful comebacks, and Pax Gold is still doing good. Be careful with the gold trade. I think that for the most part, retail's all over it already. It's very frothy up there. It might continue going, but late longs usually pay the price. Okay, so be careful with gold and all of this. I think that as the market starts to prove risk on, what happens is people start selling off their gold positions in order to get risk on. Gold has been a great investment, but nothing's going to compare to risk on assets when the conditions are correct. So just understand that from a market cycle perspective. All right, guys, I know you're here to talk about charts, so let's begin. Let's see what's going on here with ETH, because at the end of the day, Ethereum, the heavyweight of altcoins, has been showing a lot of strength. And for the most part, I know that a lot of people still worried about this. The fact that we made that lower low. The fact is that it does look retracive. I'm very aware. I'm highly aware of what's really happening here. It looks slumpy. It looks like it could fall and keep on falling. But the reality is that we came and tagged this zone already. This was an important one, guys. Let me get this TA going for you guys, because the reality is this is the level of which I had marked here on this chart for a good while. The 200 daily got, respected. The dotted line that I had here for a hypothetical level of point of interest, it came down to that level. And yes, we are currently, rolling over here, especially after a double top, which could be arguably a beginning of a change of character, and then a confirmation of a lower low. I get it, guys. The problem is that this price action was completely a failure of technology, of market structure, at the highest scale. And the systematic failure that we're talking about here induced a lot of emotion, and induced, never mind, not even inducement, but caused a huge cascade of failures across the entire space that basically caused a lot of people to get liquidated. So do we trust this price action, and do we hold it, completely accountable? I say, why not? But at the end of the day, you cannot be, totally secure of the fact that, look, a response that we're seeing right now, it could still be very bullish. We've seen these sweeps in the past. So it'll be absolutely normal to be, neutral, but still bullish, because like I said, and I keep on repeating, every entry from the last 3 days is bullish, is green. Guys, look at the response on Ethereum. Okay, now let's move on. Like I said, we need to move on from, what happened, over the weekend, on Friday, Saturday. Okay, we got to move on. Now, what do we do here? What do we say? Well, we reclaimed some good price action. We broke above, closed and opened, and potentially tonight, we have 7 hours to close again another green candle above the previous low. Not bad. Okay, not bad. Even this low right here, not bad. Now, the bigger structure, yes, we broke above a decent level. I'm very happy to see us above $4,000. But the critical level where I would like to see Ethereum close is above 4,200. Okay, this is important because the bulls will want to close above 4,200, and the bears want the price to close below 4,000. And based on this logic, we are defining a clear range, guys. It's a clear range. No matter if you're bearish or bullish, it doesn't matter. What matters is the range that is defined by the sentiment of both the bears and the bulls. It's a battle of supply and demand, right? The bulls are gonna demand, and the bears are going to supply. So what we want at this level is evidence that the bears are going to supply, and the bulls are also going to supply, because maybe they're going to capitulate, or who knows what's going to happen. But ultimately, nothing can tell me that if we are above the $4,000 level, we're still bullish. We're still okay, right? Obviously, I want to break above 4,200. But is it going to happen in one go? I don't know. And we're going to look at lower time frames in a second. But if we're above $4,000, we're still okay. We break below $4,000, things get hectic. And not even that much, to be honest, because the truth is we still have this bottom that could act as support. We do still have a good node of volume right into here based on this order block to act as support. We could still come down to this level, which was right around $3,800, gain some support, V recovery, rounded bottom, let's get going, right? This happens all the time. So it doesn't mean that it's absolutely bearish, but if you're a trader on the lower time frames, yes, we break below 4,000. There's no doubt in my mind that we're going to hunt liquidity at this order block. 38K and maybe slightly below, and who knows where we get that support. We could get it as low as maybe, again, back to 3,500, unfortunately. Okay, so we got to be real about this. Now, let's quickly get into lower time frames. Wait, hold on. Let's take a look at oscillators for a second here. By the way, if you want to know more about this oscillator, it's called Synergy Signal. Links are in the description. I want to just bring to your attention that momentum is showing some strength here. And the reason being is that volatility right now in the past came down very extreme. This volatility, although we got the craziest amount of price action, and I'm going to be honest, all oscillators are lagging oscillators, okay? So by the time it registered this debacle here, it was kind of too late for it to actually register on any indicator, right, or oscillator. But nonetheless, you can see that the volatility and the momentum did not make a lower low here on the daily on Ethereum, even though the price did make a lower low. It did not make a lower low here on the oscillator. Momentum did not come down for a lower low. That's a fact. Okay, so it is what it is. Now, all of a sudden, we have to decide, is this enough of a divergence here confirmed divergence, class A, that would be class A, and look at this expansion, and look at this expansion, the bears didn't step in that much. This was a systematic failure, guys. It's not like the bears stepped in and sold off. No, this was big players, institutions that took advantage of the plebs of the markets, the you and the I's. Okay, so this is a totally different ball game. It's not like this was natural, organic price action. Okay, so this is what I'm leaning against, is the fact is that we are getting signs of divergence on momentum on both the expansions and momentum oscillators. Okay, now, if you look at the trend oscillator, I do see some indecision. I do see a bit of bearishness. Just keep in mind that this oscillator is a little bit more lagging than this one, so it takes time to register. This is why I kind of like use this one as a grain of salt, with that fact that it is a little lagging. So we just got to kind of pay attention to that one. But nonetheless, momentum is still okay. Okay, this is where we're at. Now let's quickly get onto the 4-hour. I want to jump to the 4-hour for a second. In fact, the 4-hour is okay, but I like the 1-hour. Just gonna quickly make a statement here. The 4-hour bull flag up, as you can see, nice expansion and flagging out the current moment. Good volume range right into here in the node at the point of control, holding very nicely. You can see volatility is overbought, momentum stuck in the chop zone right here after leaving oversold conditions. EMAs are facing up, green histogram bars with the purple expansion to the upside. Nothing here is telling me with regards to momentum that I need to be bearish. Nothing. Nothing. Let's get on the 1-hour. Quickly, as you can see, momentum is showing signs of divergence, okay? But volatility, as I mentioned on the Discord about a half an hour to an hour ago, is in the favor of a bullish response. We are seeing a bullish response at momentum being in the chop zone. Guys, it's not the ideal moment to fade a bullish flag right here as we see consolidation without a lower low confirmed below the structure. Remember, $4,000 was the Q. As long as we are above $4,000, there's no need to be bearish. Trade the range if that's your thing. Get on the 5-minute, the 3-minute, trade this range until your heart's content. But until then, guys, we are waiting for a market structure that suggests a break of structure. Continuation, impulsive move, sideways price action, and exchange of hands right before resistance of the $4,200 level will suggest a continuation with strength. Obviously, we need volume to confirm that, but volatility at the current moment, the orange line, as you can see, is pushing to the upside. I wasn't quick enough to come out with this video, but at least you can see that the price action hasn't expanded just yet. Now, one may argue, but Mike, look at the divergence. There's no real clear sign of divergence yet, really, because at this moment, we were just getting convergence. Right now, if we break to the upside, okay, this could be dangerous. Okay, just keep this in mind. If we break to the upside and we do not sustain the rally to the upside and momentum continues falling here, that would result in a divergence. If momentum goes back overbought, invalidate the divergence. If the divergence stays intact while momentum keeps on falling and does not go overbought and volatility responds, the best case scenario is we see a bullish response to the upside, but it could result into a swing failure. Why? Because momentum is still on a downtrend here on the 1-hour. So what I would be worried about here, if we do not see momentum reclaim overbought conditions, is a spike, a sweep to the upside, a rejection where price action comes back into this range and eventually comes down to this level here, back to the point of entrance of the previous breakout zone, which is the max pain level. Okay, so the current moment, we are still looking bullish here. However, guys, I want to see follow through for some sort of AMD, an accumulation, maybe a manipulation, and maybe a distribution. But until then, I want to see what this breakout does. If it breaks out, obviously, we are currently at resistance of this breakout structure. If it breaks out above 4,200, guys, we need to see a sustainable move. Let's talk about that. Volatility right now is looking for overbought conditions. We want to see this thing expand. We want to see the EMAs cross and get bullish right here. We want to see the green histogram bars. We want to stay in the bullish control zone because we are in the bullish control zone here above the 0 mark on the oscillator. We want to see the expansion build an exchange of hands or some sort of continuation to the upside after breaking the $4,200 level. The last thing that we want is a deep retracement that takes us back into the range. Sustainable rallies, have sustainable moves and expansions, usually led by volume and market participation. Okay, guys, this is where it is. It's tough to be a bear, but it's also tough to be a bull. But just keep in mind that the last 3 days put everybody on the sidelines. Right now, the only people willing to take risk are the individuals that have deep pockets, that are willing to gamble and take some risks here at the bottom of the range, or have a big picture agenda and they know they can control this market. Guys, just think about it. Sidelined individuals are going to hate this rally if it runs. And obviously, guys, be prepared for any buy the dip opportunities. Guys, if I've offered you any value in this video, do the channel a massive favor. Slap the like button. It does really help out with the algorithm. If you want to follow me on the socials, the links are in the description. Better yet, guys, join the Discord. The Discord is where it's at. Lots of good alpha, trade setups, fundamentals, and learning material. The best part is it's absolutely free. Take care, guys. Have a good one. And don't forget, buy the dip.